we have an amazing opportunity to take this thing we've created, the Un-carrier, and supercharge it.
I'm unstoppable.
We fight on behalf of consumers, and we keep at it until we get it right. We kicked everybody's ass. It's not just the coming together, it's what happened when we came together.
We built our extended range 5G network, and now we're piling on a deep layer of ultra capacity 5G using 2.5 gigahertz.
Crushing our goals, expanding our ultra capacity 5G to cover 200 million people by the end of this year.
And counting.
We're celebrating over here at T-Mobile. We're going to take this race and run way ahead.
Hey everyone, it's so great to join all of you for the DT Capital Markets Day, and thanks for being here. You know, when I was last with you back in May of 2018, it was just 1 month after we announced our merger with Sprint, and we shared some big aspirations for the combined company. So today, I'm happy to be back, just over a year since we closed our merger, to share our progress and our plans for growth and value creation. And while I wish we could all be in Bonn together this year, I'm coming to you this time virtually, as is Neville Ray, our President of Technology, and Peter Osvaldik, our Chief Financial Officer. Let me just start by saying how proud I am of our team and of how our employees have united as a combined company to serve our customers and deliver outstanding business results during unforeseen times like this past year. Our first year results as a combined company say a lot about our people and about our culture, because many mergers really struggle in the 12 months right after closing. We've persevered through a pandemic, an economic crisis, and significant social and political unrest, and this team rallied together around our love for our customers. Our success reinforces the fact that we've assembled the best team of leaders and employees in the industry, and it's something that continues to set T-Mobile apart from the competition. 2020 also marked the true beginning of the 5G era in wireless. T-Mobile's already the demonstrable leader with the largest and fastest and most reliable 5G network in America. And I'm here to tell you why our network advantage will last for the entirety of the 5G era and beyond, while translating into strong business results that we believe will result in extraordinary shareholder returns. Our mission is to be the best in the world at connecting customers to their world. And our strategy to get there isn't complicated, but it is differentiated. We plan to simultaneously deliver the best network and the best value for businesses and consumers, something that has never been done before in our industry and something that only T-Mobile can aspire to as the leading pure-play wireless company. Customers shouldn't have to choose, and at T-Mobile, they don't. Add to that the differentiated customer experiences delivered by this customer-loving team, and you have a formula that allows us to pursue our simple yet audacious vision to become #1 in customer choice and #1 in customers' hearts. We'll get there by focusing on 3 strategic pillars. First, building the world's best 5G network and delivering product leadership by turning our combined network and spectrum assets into a truly superior wireless experience, an experience that T-Mobile becomes famous for, and one that's here to stay. Second, unlocking the potential of our scale and the superior cost structure that results from our network assets to deliver ongoing value leadership while also expanding margins. And third, delivering the best experiences from the best team as we build on our Un-carrier strategy to make customers happy by rewriting the rules of the industry in their favor. As we deliver on these strategic pillars, we're focused on some simple ambitions, the outcomes by which we'll be measuring ourselves and by which we think you'll be measuring us as well. They showcase our balanced approach to growth and profitability. First, Our goal is to consistently and continuously profitably lead this industry in growth, particularly once the major elements of our integration are behind us. Second, translate that growth into an increasingly valuable business, focusing on synergies, scale economies, and cost transformation. And third, we'll do all this without borrowing from tomorrow. We'll continue to make the right decisions and investments to position T-Mobile for long-term success. For T-Mobile, all of our short and long-term goals start with building the best 5G network. It's the underpinning of virtually everything we'll talk about today, and our build is tracking well ahead of schedule, and it's clearly differentiating T-Mobile as the undisputed network leader in the 5G era. T-Mobile already offers the largest, fastest, and most reliable 5G network in America, delivering 5G across more geographic coverage than AT&T and Verizon combined. And our ultra-capacity 5G, utilizing our spectrum depth of 2.5 gigahertz mid-band and above, has been rapidly expanding. While Verizon's 4G leadership may have helped them over the last decade, T-Mobile is positioned to be famous for our network in the 5G era and solidly take that crown for years to come. That's a perception shift that we're laser focused on at T-Mobile, and we're already starting to see the tide turn. And because of our merger, we're essentially funding this entire network build through merger synergies. In a few minutes, Neville will dive into the value our network represents to customers and how it serves as a linchpin for our business. Now let's talk about the work we're doing to expand our addressable markets and fuel growth for years to come. Our expansion into smaller markets and rural areas across the country will open up massive potential as our network has expanded significantly in the last few years, delivering LTE coverage on par with the other national carriers and 5G coverage that's miles ahead of the competition. And when we say smaller markets and rural areas, that represents 50 million U.S. households, almost 40% of all households in America, where our market share is in the low teens today, compared to our national market share of roughly 30%. We plan to significantly expand distribution into these areas to finally bring real competition. Our strategy to unlock this opportunity will require growth in areas where we already have both the network and distribution assets today, as well as growth in areas that'll receive these investments in the future. Building the best 5G network throughout rural America is foundational to unlocking consumer switching, and we plan to expand our physical footprint in smart ways. We'll build hundreds of new stores in small towns and rural areas over the next 5 years and add significantly more points of distribution, including entering national retail channels like Best Buy and Walmart, as well as leveraging our recently launched Hometown Experts, an innovative and cost-effective initiative to recruit individuals dedicated to assisting communities too small to support the cost of a full retail store. Combined, we expect these efforts will help T-Mobile to grow our share in smaller markets and rural areas to nearly 20% over the next 5 years. Another key area of focus is the enterprise and government sector. After having successfully redefined consumer wireless for good over the last 8 years, we're bringing that same Un-carrier attitude to businesses. Our share today in the large enterprise space is only around 10%, and we're already starting to win in this space. There are over 50 million corporate liable lines today, which is a massive opportunity. We like our game plan here because it's building on a strong 2020 performance. With our 5G leadership, businesses no longer have to make the trade-off between the price they pay and the quality of the network. They can have both. This includes our recent WFX launch, an innovative suite of products that are ideally suited to help companies adapt to the hybrid workspaces of the future with fully featured secure calling and broadband products and the peace of mind of having unlimited data for those companies that have still been handcuffed with pooled data plans by the carriers. We see room to run here with a massive market share potential running up to 20% over the next 5 years, which is still quite under-indexed versus fair share. And the B2B space is a great example of the benefits of a strong partnership with Deutsche Telekom, affording us a unique opportunity to capture transatlantic synergies by leveraging the assets of DT and T-Mobile to offer solutions to global companies. Now, looking beyond traditional mobile wireless, one of the immediate opportunities is home broadband, where we're bringing competition to an estimated $90 billion market. After successfully growing our 4G LTE home internet pilot throughout 2020, last month was the official launch of T-Mobile Home Internet, a simple, fast broadband service leveraging our expansive high-capacity 5G network to give customers a real choice in high-speed internet. And while others in the industry are still in the planning phases of what wireless home broadband could look like in the future, T-Mobile 5G reaches more than 30 million eligible broadband households today. Our focus is on a great service at attainable prices because our business plan isn't burdened with significant capital costs, given that the network is funded by the mobile business plan. We're excited for everything ahead here in this space, and we expect to serve 7 to 8 million customers over the next 5 years. We're also rapidly expanding our addressable market with prime consumers who value network quality and who may not have considered us previously due to legacy perceptions. For example, earlier this year, we launched our Magenta Max plan, giving customers the industry's only truly unlimited plan and putting the full capabilities of our ultra-capacity 5G in the palm of their hand. The early indicators that we see from Magenta Max customers underscore that the most discerning consumers increasingly consider T-Mobile when we offer the right plan that really showcases our leading 5G network. So we'll unlock customer growth by both growing the total number of customer accounts and deepening these customer relationships with more premium services and additional connected devices to consistently and profitably grow both our core business and exciting new businesses. T-Mobile continues to win customers because of how our company creates experiences, and we're relentlessly looking for ways to simplify and optimize the customer experience. Our focus is on further enhancing our digital capabilities to provide even better options for customers who, after a year of the pandemic, are showing a willingness to work with us digitally in ways they didn't before. For us, it's all about serving the customer how they want to be served and building on our already industry-leading, award-winning customer service experience, which is our secret sauce. Ultimately, we believe that when you provide customers with the best network and the best value and the best customer experiences, they will become loyal ambassadors for the brand and further drive our growth and long-term success. Now let's talk about merger synergies and our financial performance. I am incredibly proud of the team for being able to execute and perform in a competitive marketplace while simultaneously driving integration faster and better than expected to capture our merger synergies and deliver value for both customers and shareholders. Our 5-year growth and financial plan, built on the conservative market assumptions I've shared with you here, creates enormous potential shareholder value. Peter will go into greater depth on these topics in a few minutes. Now, before I turn it over to Neville and Peter, I want to provide some insight on another important focus area for T-Mobile, making an impact that matters for our employees, our customers, and the communities that we all serve. Throughout the merger, we talked about how we'd not only become a bigger company, but also a better one, using our network scale and resources for good. Our marquee initiative here is Project 10 Million, and it's focused on the audacious goal of helping to connect every single student and eradicate the homework gap in the U.S. so kids can get the access they need and the education and equal opportunity that they deserve. We launched this unprecedented $10.7 billion initiative last year and then enhanced it to address the more pronounced inequities that have arrived in the wake of the COVID-19 pandemic. We've focused heavily on our people over the past year as well because we believe only the best team working together and inclusively can deliver the best experiences. With the world watching, America has experienced significant social unrest over the past year in the quest to achieve greater racial justice. At T-Mobile, our commitment to diversity, equity, and inclusion plays an integral role in our culture, and it always has. Last year, we launched our 5-year Equity in Action Plan, which reflects the ways we're embedding DE&I into our culture as the Un-carrier. And we continue to build diverse talent in our leadership ranks to reflect our highly diverse employee group and the communities we serve, with more ambitious programs in this space than ever before. In addition, we continue to follow through on our longstanding enterprise sustainability commitments. T-Mobile was the first major telecom to commit to 100% renewable energy back in 2018, a goal that we expect to achieve this year. And in recognition of our efforts, we were recently named to the CDP's A-list for climate change, the gold standard of corporate environmental transparency. We've created ambitious goals to positively impact the planet, and we're immensely proud to be the only U.S. telecom given this top listing. Okay, now let me turn it over to Neville to tell you how T-Mobile's 5G network is leading this industry into the 5G era, and how we are prepared to sustain and expand our network advantage for the duration of the next decade and beyond.
We have been able to create a great network that's not only fast, but broader as well.
It's an engineer's dream. We want to maintain and stay ahead, lead the industry.
This ultra capacity on top of the extended range is what really makes T-Mobile different.
We have the networks, we have the spectrum, we have the people, we have the technology.
Largest, fastest, and now the most reliable too.
It's so great to be here today, and I'm excited to update you on our network journey and the progress we continue to make. As many of you know, I have been personally invested for many years in creating a leading network here at T-Mobile. But there has never been a more exciting time in the growth of our network than right now. We are uniquely positioned to become famous for network as we continue to combine our superior assets and execution to deliver a demonstrable and sustainable 5G and overall network advantage. There are 5 major and compelling reasons why our network leadership position today will be a durable advantage into the future. Let me walk you through these one by one. First, we have a clear 5G coverage leadership position today, with 5G coverage in all 50 states and Puerto Rico. Our extended range 5G provides reliable coverage where customers live, work, and play. And just less than a year after reaching nationwide, we now cover 295 million people with 5G across more than 1.6 million square miles today. That's nearly 4 times more than Verizon and over 2 times more than AT&T. And we're expanding our extended range 5G to over 300 million people by the end of this year, and we expect to cover 97% of all Americans by the end of next year. At the same time, we are the only operator to have deployed dedicated low-band and mid-band spectrum, delivering on the true promise of 5G, with our ultra-capacity 5G delivering game-changing speeds averaging 325 megabits per second and reaching 140 million people already in 2021. And we're expanding our ultra-capacity 5G at a remarkable pace to bring those game-changing speeds to 200 million people by the end of this year, expanding to approximately 250 million by the end of next year, and on our way to bringing ultra-capacity to nearly 90% of all Americans by the end of 2023. Multiple independent third parties, including Ookla, OpenSignal, and Umlaut, all recently gave exciting accolades to T-Mobile's 5G network, based on real customer usage from millions of device measurements. We just continue to pull away from the pack. OpenSignal recently released their latest report, showing that T-Mobile customers' average 5G download speed increased by 23% since the beginning of the year, while speeds on other networks stayed virtually unchanged. widening the gap to competitors as T-Mobile now has nearly 50% faster speeds than Verizon and 30% faster speeds than AT&T. All signs point to one clear fact. T-Mobile is America's 5G leader with the largest, fastest, and most reliable 5G network. Second, our network upgrade program is fueled by synergies from our network integration. This integration program, combining the assets of Sprint and T-Mobile networks, has presented the opportunity to not just combine the networks for LTE services, but upgrade them at the same time for 5G. Unlike our competition, who face incremental 5G costs in all that they do. Third, we maintain a meaningful spectrum advantage following the FCC's recent C-band auction, where we added to our ultra-capacity 5G in urban and suburban areas that the spectrum is well suited for. We came out of the auction with the best mid-band spectrum assets by far, while our competitors spent unprecedented amounts trying to catch up. Our mid-band is mostly comprised of frequencies with superior propagation to C-band, which means they are superior not just in reach, but also in deployment costs. With this recent C-band spectrum auction complete, we are well positioned to maintain our 5G leadership for the duration of the 5G era, not just for a year or two. Our position and advantage will be long-standing. Bringing all of this together, our 5G leadership is even more clear when you combine both our spectrum and coverage deployment plans, as contrasted to our major competitors. Fourth, through this capital-efficient deployment, we have the financial capability to smartly invest and maintain this network advantage, as Peter will describe in a few minutes. We are delivering faster on this deployment and a broader rollout to the 2.5 gigahertz spectrum for less total capital than originally planned in the merger announcement. This is as a result of material procurement savings from new agreements with key partners and significant savings from an efficient deployment engine, including adding multiple spectrum bands on a single site at the same time, as well as more effective controls via a lean deployment model, effectively reducing the time to deploy. And fifth, but by no means least, we have the most technically advanced network and a clear leadership edge on 5G innovation. Not only are we building the densest, deepest, and broadest network, but we are also building on our history of 5G firsts and embracing technological evolutions as they are ready to improve customer experience, lower costs, and unlock new revenue opportunities. And our network enhancement program is running at a truly unprecedented pace, with thousands of radio upgrades underway each and every month. So in summary, I am so excited that T-Mobile is leading what I expect will be a 5G revolution. We have all the tools to succeed, a robust plan, and a powerful team to go execute it. Now let me pass the mic over to Peter.
Thanks, Neville. I'm excited to get to our financial highlights, starting with a look at synergies. As you already know, we beat our own aggressive synergy targets for 2020, realizing $1.3 billion, or 4 times what the original merger plan expected to achieve in the first year. And during our Q1 earnings a couple weeks ago, we updated our 2021 synergy guidance, now expecting to realize $2.8 to $3.1 billion in merger synergies, which represents a $550 million year-over-year increase in avoided costs and a $1.1 billion year-over-year increase in P&L benefits at the midpoint of our 2021 guidance, helping to fund the investments in our network and growth initiatives this year. And we're not slowing down. Our team's strong execution led to us updating our expectations at our Analyst Day for total run rate cost synergies of approximately $7.5 billion per year by 2024, up 25% from the original merger guidance of $6 billion. While the full original and increased run rate synergies are achieved in the same time frame, primarily due to the timeline for avoided costs, we overachieve in each year relative to the original plan. In fact, we now expect to exceed the original $6 billion target in 2023. As we have said from the beginning, these massive synergies are unlocked with some one-time upfront cost to achieve. We continue to expect approximately $15 billion of total net cost to achieve, delivering more synergies with no incremental cost. This faster paced and increased run rate result in a new net present value of over $70 billion for shareholders, more than 60% higher than the original $43 billion MPV in the merger case, including a lower cost of capital, which reflects not only lower rate market conditions, but just as importantly, our scale and performance driving a lower cost of capital as demonstrated by our capital markets activity. Our team's strong execution and our strategic plan is now expected to deliver financial results that exceed both the original 3 to 4 year and longer-term targets that we provided in the merger announcement. For reference, we are using 2023 as the comparable midterm point, as it is the third full year following our actual closing date. And as we think about the long-term projections for the business, we are using 2026, which is actually earlier than the original long-term guidance milestones, which assumed 7 to 8 years out. And of course, our ambitions include continued growth in the business beyond 2026, driving a sustainable increase in shareholder value in later periods too. All right, jumping into the numbers, and for clarity, these are on a US GAAP basis, which will differ slightly from IFRS. Core adjusted EBITDA, which reflects our underlying business performance without the noise of declining lease revenues as we de-emphasize device leasing quickly post-closing, is now expected to be between $22.8 and $23.2 billion in 2021. In 2023, we expect to be between $28 and $29 billion versus the original merger plan, which implied core adjusted EBITDA of $25 to $27 billion, a $2.5 billion increase at the midpoint, driven by growth in service revenue and higher synergy realization. We expect further growth in 2024, with core adjusted EBITDA expected to be in the range of $31 to $32 billion, with additional service revenue growth and full synergy realization. Long term, we expect core adjusted EBITDA to be more than $36 billion, more than $1 billion above the high end of the original merger target, driven by higher service revenues, along with additional efficiencies, including in the areas of continued distribution transformation and an increasing consumer digital experience. Looking at capital expenditures, we now expect CapEx in 2021 and 2022 to be between $11.7 and $12 billion annually as we deliver our network integration milestones earlier and build a nationwide multi-layer 5G network with better capital efficiency thanks to both material procurement savings from our improved scale and deployment efficiencies, which Neville highlighted. We expect CapEx in 2023 through 2026 to be between $9 and $10 billion per year, reflecting the capacity and network efficiencies we expect after having completed our network integration and be largely done with our nationwide 5G deployment by 2022. This capital plan also includes all of our expected costs for C-band deployment. This all translates into the promised unlock of significant free cash flow. In 2021, we now expect free cash flow to be between $5.1 to $5.5 billion. Looking ahead, free cash flow is expected to be between $13 to $14 billion in 2023, a massive $3 billion or 30% increase from the original expectation of $10 to $11 billion. Again, a product of increased growth in service revenue and operating leverage, bigger and faster synergy capture, and improved capital efficiency. We see further growth into 2024 with an expected range of $16 to $18 billion, and long term, we expect free cash flow to be more than $18 billion, above the high end of the original target. And similar to our 2021 guidance, our mid and long-term free cash flow guidance does not assume any material net inflows from securitizations. And while our expectations for midterm and long-term milestones are all above the original merger plan, equally exciting is that this is really a story of cumulative overperformance in every year, delivering cumulative free cash flow through 2025 of up to $65 billion, up nearly 20% from the original plan. So as Mike highlighted earlier, with our increased cash flow, we see the flexibility for substantial shareholder returns, potentially up to a total of $60 billion from 2023 through 2025, all assuming a conservative mid-2 times core adjusted EBITDA leverage ratio. As you would expect, we will always focus on maximizing value creation for shareholders, and will assess future spectrum purchases, M&A options, and share repurchase opportunities to create the most shareholder value. And of course, there is massive potential beyond 2025 as well. I couldn't be more excited about this updated plan, and I'm extremely proud of our team's ability to consistently meet or exceed the guidance we commit to. We have done that now as T-Mobile since 2013, and we have every intention of continuing to deliver on that front and maintain the trust you place in us. I can't think of a better high note to end on. Now I'll hand it back over to Mike before we get to your questions.
Thanks, Peter and Neville. Great job. Okay, we're eager to take your questions, but let me leave you with a final thought. As you heard in our remarks, we believe T-Mobile is uniquely positioned with this once-in-a-career value-creating opportunity. We have a great hand. And to me, that means the industry's best assets, a clear and simple business strategy that's already proven, lots of room to run, exciting new businesses where we have permission to win, and a team with a track record of delivering. Add to that a strong balance sheet and a compelling financial plan, and the result is a business with massive cash flow and value creation potential. On top of it all, we have the opportunity to continue to change and improve this industry yet again as the Un-carrier, to the benefit of consumers and businesses everywhere, to be the best in the world at connecting customers to their world and to earn their hearts in the process. I am tremendously excited about our future. And while we get into position to take your questions, I'll leave you with this video, a collection of a few words that form our brand manifesto, words that say everything you need to know about who we are, what makes us different, and where we're going. Take a look, and we'll see you live in a minute. Thanks, everybody.
We love our customers. It's who we are. Our unstoppable mindset sparked a revolution, putting people first, treating them right, and changing the rules in their favor. As the Un-carrier, we changed wireless forever. We led by example and forced an entire industry to follow. That was just the start. This revolution is far from over.
Ready to go.
Now more than ever, customers need someone fighting on their behalf. A company with a beating heart.
I love you.
That sees people over numbers. A company inspired to change the world for the better. A company that celebrates differences, knowing that we are better together than apart. Today, our success makes possible what was impossible before. A transformative network experience connecting everyone, everywhere.
Happy birthday, Mom.
And with the highest capacity network in U.S. history comes the best value in wireless history. Eliminating the false choice between a great network and affordable access.
I can sense the sky. I can sense the sky. 'Cause we're rising up.
We don't wait for change. We make it. We use our brand, our people, and our network as catalysts for good. Our future is in redefining wireless, not what it is, but what it will be. In bringing choice, value, and simplicity to customers in entirely new ways. In reimagining a connected world for all without limits. We are far from done. We're taking this revolution to the next level, becoming the best in the world at connecting customers to their world and earning a place in our customers' hearts forever.
Let me touch the sky.
We are T-Mobile, the Un-carrier.
I'm so high, I can touch the sky.
And we won't stop.
All right. All right, we're excited to get to your questions. So let's get right at it. Looks like we've got some names queuing up already. So let's take our first question from Usman Ghazi from Berenberg.
Hi, guys. Good to see you, and thank you very much for the opportunity. It's always great to see the excited presentation from you guys. I guess the question I had was on one of the comments you made earlier about investing to create that network perception change in the US. And specifically, and I don't know whether this is the right perception. I'm obviously sitting in London, so I might have gotten this completely wrong, but it seems that Verizon obviously has a very close relationship with Apple. I mean, at the iPhone launches, you see them, Verizon there, and on the TV when I'm watching. I mean, there's a lot of joint advertising going on between Verizon and Apple. And I'm just wondering. I mean, that at first it seems surprising, obviously, because I mean, it's pretty clear you have the best network, and you're extending that lead on 5G. So is there any chance of T-Mobile being able to break that stranglehold that Verizon has with Apple, obviously because of the captive 4G base that they have, or is it going to take more time?
Yeah, thanks, Usman. Great question. Thanks for joining. And yeah, it's very interesting. I'll answer it two ways. First of all, as it relates to the big companies, I'd say T-Mobile, AT&T, and Verizon all have great partnerships with Apple and the other major providers. So no concerns there. And I wouldn't overread, Verizon appearing at their event in any way. We all do the exact same amount of joint advertising and co-development and so many things. But your question has another premise to it that I think is very important, which is Verizon has established for over a decade now brand fame around being the best network in the United States. And that's very clear. And that's something that you heard us remark on in our upfront remarks, that we know our opportunity is to turn that around. And let's face it, in 2010, at the beginning of the 4G era, they jumped out in front. And AT&T jumped out with the iPhone, but Verizon jumped out with LTE, and they got after it faster than anybody else, and they claimed that mantle of network leadership in the 4G era and then rode it. They made the rules of the 4G era. And those rules, by the way, were terrible. Things like contracts and overages and roaming when you leave your country and treating people poorly and so forth, high prices. So we came along and decided to try and change those rules, and we were always in catch-up mode on our network during the 4G era. Today, in the 5G era, T-Mobile has the opportunity to make the rules. And those rules are going to be customer friendly, and they're going to be built around a brand that in the 5G era claims the mantle of network leadership. And that's so important. Right now, we have 5G leadership, way ahead, as Neville just got done describing to us. But we have to translate that into perception of overall network leadership. That's going to mean working with our partners like Apple, to the premise of your question, but it's also going to mean taking advantage of big expansions into the places where we've historically been behind. We already get good credit in the big cities for having a good network, but in the huge swaths of this country, 40, 50% of the country that are smaller markets and rural areas, we've been way behind. And that's a massive tailwind for our business as we start to come up the curve with the demonstrably best 5G network in rural America, as we talked about in our remarks. So we're taking this very seriously. We know we don't just have to be the best, we have to get credit among businesses and consumers for being the best, and our strategies are geared around that.
Thank you.
You bet.
All right, excellent. Let's take our next question from Joshua Mills from Exane.
Hi, guys. Great to see you, and thanks for the questions. There's two from me. The first is just related to what AT&T has talked about earlier this week with the deal they've done on Time Warner, the decision that they want to accelerate in CapEx, market share gains, etc. Now, you've talked a lot about how 5G is an opportunity or a window for you to win, share, and change perception. And I guess that a lot of the work you've been doing is to try and extend the window on 5G leadership and use that as an opportunity. So my question is, firstly, does the AT&T deal and the cash they've unlocked perhaps either narrow that window because they'll be spending more on CapEx, or make the market more competitive in the near term if they choose to deploy more cash into handset subsidies? And then the second question, go on, sorry.
No, please let us know,
Yeah, no, and the second question was just, we've heard a lot today from the European side of Deutsche Telekom, and I think often we look at the US business and see the growth and returns and are quite envious. But a key theme that's come out of today's presentation is the importance of convergence, fixed line, et cetera, in Europe. Now, I understand the US market's different, but do you see any advantage at the moment from your competitors owning fixed line? And is there any potential scenario in which you would think about either doing deals with fixed line operators on wholesale, or maybe even building organically in that space? Thanks.
Thank you. Those are great questions. First of all, I'll start on AT&T and then let Neville pile in. I think what we've seen from both Verizon and AT&T over the past 2, 3, 4 months, and certainly this last week with AT&T, is a journey towards both of our major scaled competitors realizing that T-Mobile's strategy of being a pure play mobile internet company is the right one. All content and entertainment of all kinds are leaving their prior linear forms and going digital, landing on the internet. And the internet itself is going mobile. And T-Mobile years ago established itself as a pure play mobile internet company and sought the best assets and won the best assets in the industry to lead the industry as the mobile internet company focused on this space. And it's a great space. This is a viable, profitable industry that's changing people's lives in big ways. And both of our major competitors have decided to wake up and try and emulate our strategy. The problem is they're years behind, and we have the wherewithal to stay ahead for the duration of the 5G era, as Neville mentioned in his remarks. And so an example of that would be, and I'll let Neville jump in before we get to your second question. An example of that is what Neville took you through in his remarks, which is the pace at which we're going, even with AT&T's newfound love of mobile internet, will allow us to stay ahead, especially when you apply not just the spectrum we'll have on 5G, the amount of spectrum, but the amount we have deployed on 5G. Multiply that to look at megahertz pops, as Neville showed us, and the advantage that we have is massive and sustainable. Neville, maybe you can comment on it.
Yeah, thanks, Mike, and obviously delighted to be here today and take the cues. To your question, Josh, on what happened, this week with AT&T. I mean, finally now we see our major U.S. competitors, as Mike said, starting to look at our strategy overall as a business, but importantly too, they're starting to mirror and chase our network strategy. And so we've talked for a long time about, the capability of a multi-layered, mid-band, low-band, network. And so now we see AT&T kind of coming all in, on that model and plan. And to just shape some of the news and announcements they made, I mean, the one thing that caught my attention was that they said they would have 200 million people covered with the recently acquired C-band spectrum by the end of 2023. So to contrast that to where T-Mobile is today, as I outlined in my comments, 140 million people we've covered in the last year since we combined with Sprint. By the end of this year, 2021, we'll be at 200 million people covered on that mid-band layer, and a much deeper and richer spectrum layer than AT&T can accomplish by 2023. So even though they're coming after and starting to mirror and chase our strategy, we have an incredible leadership position that they now have to try and close that gap. And so, as we talk through here, every day our network and the performance of this network is improving, and our customers are starting to understand that more and more each week, and as we move through, every month. And so for AT&T and Verizon, there's a lot of catch up they have to do to try and mirror and match what we can do, this year inside 2021.
Just to the profitability piece before we move to your question on fixed assets. Look, I think this is very good moment in time for the industry. And if the premise of the question is if Verizon and AT&T have finally decided to come around and pay attention to their mobile internet businesses. Is that bad for us? And I'd say absolutely not. Competition is tricky only if there's no differentiation. Competition's a great thing and something welcomed by T-Mobile because our position is differentiated. And the more this industry focuses on mobile, the more this industry focuses on smartphones, the more we get to showcase to people that increasingly consider, whether they're with the right carrier in a more vibrant market, our differences. Showcasing our differences of being the first company in the history of this industry to be able to simultaneously offer the best value, which we can sustainably do with our asset base, and the best network, where we're ahead by several years and positioned to stay ahead. That's something that in a market that's more vibrant and made a market where there's increased switching through the efforts of our competitors, that will ultimately favor us. And we think it's a very good market. It's the profitable part of the industry. That's why all of our competitors have decided to focus on it. I think that means that they understand that it needs to stay profitable because this is the knitting. And so all these signs, I think, are good signs for us. Now, to the second part of your question about fixed, and we'll try to be quick here. I'd give the short answer and then again turn it to Neville. No, we don't see it as an advantage. In fact, when the primary profit pool is mobile, as we just talked about, the advantages of owning fixed assets are a bit false. And you'd be stealing from one profit pool to feed the other. And so the ownership advantage gets diminished. We think we can get there and have demonstrated we can get there through partnerships. We have fantastic fiber relationships all across this country. There's plenty of supply. And when it comes to tackling enterprise opportunities, we're working with partners like our recently announced collaboration with Lumen. So just briefly, Neville, on whether or not owning fiber is a disadvantage or perhaps if it's an advantage to have the flexibility that we have.
No, I mean, clearly, Mike, for us, I mean, it's an advantage for us to drive our investments into, our radio and our wireless network. And we have just tremendous deals and partnerships out there to support our fiber delivery to our cell sites, in a 5G world. And we've had fiber to our cell sites for many years. Now we're just scaling that delivery. We have actually decreasing price levels coming into our business while we scale the throughput and output on those links. So we're very, very comfortable today with how we construct our delivery there.
And this is an area where, to the premise of your question, the U.S. market is a little bit different than Europe. Obviously, the trend here, we never did fully converge. And in the recent moves as it relates to media convergence, both of our major scaled competitors shedding media assets as a sign that there wasn't the promised benefit of convergence that they had sold shareholders.
All right. Let's take our next question from Ulrich from Jefferies.
Yeah, thanks very much. Mike, if Deutsche Telekom were to sell the T-Mobile stake tomorrow, what elements of your midterm guidance would you have to change? I mean, I suppose it's a slightly cheeky way of asking what are the tangible benefits that the parent brings to the party from your point of view, where you're sitting?
Well, first of all, I'm not sure it would change anything in that. I'll answer it from two perspectives. One is we've certainly been enabled by DT through the years with investment, but now we have a business that is producing significant cash flow and is able to, in recent years, acquire its financing on its own. So a company that is viable on its own. And secondly, it's a business that is neither constrained by DT. Every major thing we've needed to do, we've been able to partner with and be supported by our major owners, DT. And so we've not been constrained yet either. What we do have right now are some terrific opportunities for synergies, as I talked about. And we're collaborating with major global companies to serve those companies together in transatlantic ways. And that's terrific. So look, DT, I think much to its credit, has run and allowed us to run the U.S. business as an independent U.S. public company with them as our major shareholder. And that has allowed us to focus on our knitting in a way that's created an awful lot of success. And so for us, we're consolidated into DT and are looked at by DT as part of DT. But they deliberately ask us, and with our board, to run this as an independent company. And, my fiduciary is to all shareholders of our company, all shareholders of TMUS, DT included. And that's how we run it, as an independent U.S. listed public company.
Right. Thanks very much. Thank you.
You bet.
Great question. All right, let's go to Jacob Bluestone from Credit Suisse.
Good morning, guys. Thanks for taking the question. So I had a question around the capital returns that you referenced earlier. And I guess there's two aspects. One, can you just sort of talk us through how do you look at dividends versus buybacks when thinking about it from a TMUS point of view? And also, as you rightly pointed out, you've got a fantastic track record of beating your own guidance. So do you think there's a potential that we could see those buybacks or those capital returns starting sooner than 2023? Thank you.
I absolutely love it. You announce an up to $60 billion share buyback, historic buyback program, and it's how soon can it start? So Peter, can it start by 2022 and can it be bigger than we promised?
Absolutely. Well, thank you so much for having us and the great partnership here. So first off, I'm really excited about the massive free cash flow generation of this business. And it truly is a differentiator, as we've talked about, this massive 5G network that's being built, the greenfield opportunities that others do not have in smaller markets in rural America, in enterprise, and the unlock of synergies during that whole time frame allows us to have expanding margins. And by the time we get to our midterm guidance, have the best conversion of service revenue into free cash flow, which helps unlock and allow those massive potential shareholder returns. A couple questions you had. One is, how do we think about it? Would we do share repurchases or dividends? And right now, the way we're thinking about it is our intention is to continue to be a growth company, both in the midterm as well as the long-term guidance. So as we see it right now, we're definitely thinking the flexibility that share repurchases versus a dividend offer would probably be the way we would initiate shareholder returns, and of course assess it during that period and go forward. In terms of can we start early, as you know, right now the focus point is building this massive network and spending the cost to achieve funds to unlock the synergies and the integration as rapidly as possible, while also making all the investments to unlock those markets and get to those rapid free cash flows. So is there opportunity? If we go faster, if we have better success in terms of quicker integration, quicker synergy delivery, or outperform some of the assumptions that we put in the model around growth, ARPA, ARPU, yeah, there's always a potential that we could come to our board and ask to initiate something even before 2023.
Thank you.
Excellent. Let's take our next question from Polo Tang from UBS.
Yeah. Hi, everybody. Thanks for taking the questions. I just have two. So it's clear that you're significantly exceeding expectations in terms of both growth and synergies. But what do you see as the main risks to your medium and longer term outlook? Is there anything that keeps you awake at night? Is it cable gaining share? Is it Dish building a fourth mobile network? Or is it AT&T and Verizon getting more aggressive? So that's the first question. And the second question is you obviously outlined a clear plan in terms of accelerating growth from expansion into rural areas, the B2B market, but also fixed wireless access. But are there any recent data points that you can share to give us an idea of how you're progressing in these new segments?
Sounds great. Well, I'll start. It's a great question, Polo. And the way I think about it is that, for me, obviously, we've built this company by being fighters, by playing above our weight, by being scrappy, by running scared, by never resting. You saw some of that philosophy in the video that we ran right before we came on. And, look, I think competition is a great thing, as I was saying earlier, as long as we're differentiated. And so the thing that keeps me up at night is making sure that in every time period for the foreseeable future, for years to come, T-Mobile is well differentiated in this market for both businesses and consumers, because that's what allows us to navigate competition and win, like we've been doing for years. As it relates to the specific competition, look, I feel great about our hand of cards. It's never been better. Relative to cable and Dish and smaller companies, we have the scale. And we have the advantage of our synergy-backed model, and we have owner economics. It's going to be very hard for much smaller companies to compete with us over the long haul on being the best value, something that our brand is famous for in the United States. As it relates to our scaled competitors, we have better assets on network. The factor of competition for scaled competitors is network. We're way ahead, and with the superior assets and balance sheet to stay ahead. And that allows us to compete on product leadership and network leadership with the scaled competitors. And so, look, I feel great about our differentiation potential. As I said in my first comment, we're going to need to convince the world. Our brand is coming from a place of, where we haven't been the network leader, and that's a risk to our business. We've got to convince businesses and consumers that we are the demonstrable network leader in the United States, and we've seen great progress on that. With the percentage of people seeing us as the 5G company more than doubling just in the last 6 months. So then the second question that you're asking about is our big growth areas, like small town rural, smaller markets, prime suburban families, enterprises, home broadband. And I just tell you that all the signs are looking good for these growing businesses. As you know, we're not starting from scratch. We declared several years ago a path to move from 230 to 265 million people covered by our full distribution. And we carved out shares from single digits now up to 13% share in smaller markets. And we're saying in our plan, the one that delivers all this cash flow, that we can, in 5 years, after a lot of effort, get it all the way to just 20%, just shy of 20%. And if that sounds a little conservative to you, it should, because as you know, our national market share is well over 30%, and that includes a giant swath of the country where it's only 13. So do the math on the balance of the country, especially the big markets where T-Mobile already is the market leader. So that's a terrific opportunity. Similarly, we're a 10 share in the enterprise space and already growing share at a rate that would allow us to exceed our ambition of being a 20 share in the planning horizon. Our last 2 quarters were some of the best quarters in our history when it comes to gaining share among enterprises for smartphone adoption. So some terrific early indicators. Home broadband, as you know, we piloted it for a year in LTE. We just launched it. And the experience that customers are having is fantastic. We look at early on, you're looking at things like remorse rates and net promoter scores and whether or not people are happy with the service, because that bodes best for whether or not our long-term aspirations are solid. And the net promoter score has tripled from people who adopted our service versus the score that they gave their prior provider. So they're very, very happy with what we're serving them in the early going. So those are a few things, and we'll be sure to check in as we announce each quarter and provide some spot reports here and there on how we're doing on these growth trajectories.
Great, thanks.
You bet.
All right, let's move to Steve Malcolm with Redburn. Steve, go ahead.
Thanks a lot, Judd. Thank you, guys. Thanks for taking the question, and great presentation. Always very upbeat as usual, which is great. Yeah, a couple, just on coming back to sort of collective outlook for the industry. I mean, I think we all understand your 5G network advantage, but when I look at what you're saying, AT&T saying, Verizon saying, you all seem to think you can grow EBITDA in the mid-single digits, just sort of backing into the AT&T release. It looks like they think they can grow EBITDA 5 to 6%. Do you think that's a credible position for the industry over the next 3 to 4 years? And if not, what is the downside of maybe your big competitors failing to hit their targets? And then just on fixed wireless access, I know it's very early days, but can you maybe help us understand what you think the sort of annual switchers pool in the States is? Give us some sort of bottom-up sense of how you get to that 7 or 8 million number, a percentage of the gross ads that you have to take to get there. That would be very helpful. I think we'll understand the top-down picture, but the bottom-up would be quite interesting. Thanks.
Yeah, thanks. Well, first of all, on the home broadband piece, I can't unpack it for you too much other than the fact that if you think about the market that we're addressing, the vast, a huge swath of the market, a significant minority, in fact, almost half of the market where we're going has no choice. They have 1 or fewer options in rural America, smaller towns, as it relates to home broadband. And so what we're doing is bringing our model that knows how to compete into these markets. And we're going to be bringing competition and choice for the first time. And it's important to note that we're ahead of our other wireless competitors in this area. And so, think about it this way. When we arrive in town with a viable option that's high quality and lower price, there's suddenly going to be a big market out there of people saying, hey, could I save some money in a time when the economy is probably telling people to find ways to save money? And at the same time, we're advertising our mobile service and our 5G leadership in their neighborhoods. Now, when our competitors arrive, when Verizon and AT&T arrive later, they have to do more than that. they have to offer something that's better than T-Mobile to be a late entrant. They have to come with a superior point of difference, and they don't have it. They're not going to have that to offer in very many places. And so that shows, I think, the importance of our urgency of getting to these markets quickly with our mid-band strategy. Now, as to your first question, the health of the industry, listen, I take it as a very good sign that both of our major U.S. scaled network competitors have decided to focus on strategies more similar to T-Mobile's, mid-band centric, 5G oriented, focused on the knitting, pure play mobile internet companies who then say they want to grow their margins. And to me, those are all healthy signs for the industry. This is a viable, profitable industry. It's capital intensive, it's difficult, it's competitive, it's getting better for consumers every year, but it's got players that are now going to be able to have no choice but to be focused on the overall profitability of their mobile operations, which is probably a good thing for the ongoing health of the industry. They have no place else to go to make their financial aspirations. Now, if the second part of your question is, which is asking me to speak to their credibility, listen, I can only speak to our team's credibility. And thank you to the last couple of people who gave us some credit for the fact that, we do what we say around here. When we say we're going to make 100 million pops on mid-band 5G by the end of 2020, we get there. When we say we're going to get to 200 in 2021, we get there. When we say what the financial results are going to be, we go get that done. And our competitors, look, what they're doing today is a complete about-face from what they stared at the camera just a month ago and said they were going to do. And so, look, I can't speak to their credibility. There's some disarray and some turmoil, it looks like, from the outside. But what I can say, regardless of their words, which I'm not sure, what people are perceiving about the quality of their words right now, regardless of their words, my perception is they have no choice but to treat this industry as the place that they will derive margins and cash flows. And that's probably overall good for the health of our industry.
Yeah, thanks a lot.
You bet.
All right, let's take our next question from Ottavio Adorizio with Societe Generale.
Hi, thank you for taking the question. Congratulations on the results. Couple of questions. It's actually both for Peter. The first is a follow-up from shareholder returns. And the second is on the future renewal of tower leases. On the shareholder returns, I didn't hear about the credit rating as a sort of key priorities whenever you decide about the cash distribution. Consider that you are still non-investment grade and in a climate of rising interest rates. Could you just tell us if your share buyback, the start, or at least the acceleration, will be timed according to an upgrade to investment grade for your credit ratings, or that is not a priority? And the second one is on your renewal of the tower leases. Now, T-Mobile does not report net debt with tower obligation included, but Deutsche Telekom does report debt under IFRS, and that's required to capitalize all leases. Now, I believe that T-Mobile has 3 to 4 years left in the tower leases with Crown Castle and SBA Communications. As you renew American Tower's lease 1 or 2 years before the expiry date, would you plan to renew the Crown Castles and SBA Cons within the next 2 years? And if so, would the impact on tower obligation on T-Mobile be smaller or larger than the $11 billion that you recorded after renewal with AMT? Thanks.
Excellent. Well, thank you for those excellent questions. And one, we are absolutely focused on getting to corporate family investment grade rating. And that's a priority for us in this business plan with a massive unlock of free cash flow and rapid deleveraging, where we'll be in the mid-2 core EBITDA leverage range by the end of next year, allows that for us. And we're absolutely taking that as a priority. You can already see where our secured investment grade rated notes trade ahead of AT&T even today. So I think the market takes us very seriously. They're very much looking forward to us delivering on the progress, and that's the stepping stone to get to IG. I don't see getting to corporate family IG as the precursor to beginning shareholder returns. It's something we would consider in terms of the timing of that, but they might come very closely together and not necessarily a precursor for us. On tower leases, so yes, you mentioned and referenced our ATC renewal, which was just an incredible job by Neville and the team to allow us massive flexibility, lock in decreasing escalators in the industry for a significant length of time, and generate, most importantly, cash savings from day one. Yes, there's a accounting, interpretation of this that puts it on the lease liability, but from a cash savings perspective, it was day one savings. As it relates to Crown, the priority right now is building this 5G network and giving Neville and his team all the tools necessary and investments necessary to maintain this lead for the duration of the 5G era. And if there's opportunity to do that, that makes economical sense and benefit with Crown, then of course we're going to entertain that.
And the impact on the tower obligation would be larger or smaller? Because from memory, I think your exposure to Crown and SBA combined, it's larger than the one towards American towers, at least historically, I don't know, going forward.
Yeah, I'll tell you, I can't speak to where any sort of negotiations can end up, but I can tell you that just like we approach ATC and just like we approach everything, we're looking towards value creation for this enterprise. Flexibility to maintain the duration of the 5G era, the network advantage, so giving Neville the flexibility, but also creating economic advantage for our shareholders. Where that ultimately ends up in terms of a magnitude and when, it's hard for me to predict right now, but those are going to be the fundamental drivers for any decision that we make.
All right. Let's take next question from Akhil Dattani from JP Morgan.
Hey guys, thanks for taking the questions. I've got two, please, if I may. The first one, obviously, we've talked a lot about your accelerating cash generation and the $60 billion buyback potential that you have. And maybe just wanting to address that question another way, which is, obviously there is accretion and value to be created by buying back stock, but potentially that money could also be used to accelerate growth or find new other opportunities to create value. So I just wondered if you could talk about that trade-off. Are there other areas of opportunity for growth that you can think of? Where else could you spend that money if we think about alternative uses of cash? So that's the first one. And then the second one is, sitting here in Europe, we always struggle with the belief of CapEx going down a lot long term. European telcos haven't had the best track record on that front. You've obviously got a very nice message around CapEx going out to 9 to 10 billion long term. Can you just talk us through how we get confidence that CapEx can reduce to those sorts of levels long term? Thanks a lot.
Yeah, I'll start and then maybe ask Peter to comment. Because your two questions are kind of related to each other. First of all, this business plan that we have crafted is a growth plan for the duration of our planning period and beyond. So it includes the investments that we need to make in order to continue growing after the planning period. And that's different than I think some business plans out there look like. And so in the out years, these 9 to 10 billion in CapEx are what we believe we need to have a viable, competitive network on the back of years of building on a superior asset base in order to be able to continue to grow. And the delivery of significant cash flows that gives us the potential for share buybacks is net of investments that we would make in ongoing growth. Now, that's not to say that there might not be trade-offs as it relates to the growth that we have and potential greater growth opportunities that could come instead of those returns. And so it's important to understand that as we go along, we'll be looking at opportunities, and if there are great opportunities that accelerate our long-term potential, we'll trade that off, and we'll be very transparent as we do that.
Absolutely, Mike. I couldn't agree more. It's going to be looking at that point in time as to what are the opportunities in front of us to create the maximum shareholder value. But what's equally exciting is, as you stated, is the magnitude of free cash flow that this plan delivers. Not only from 2023 to 2025 of the $60 billion, but beyond into the long term. That continues. So you have a lot of room with free cash flow generation to make the right trade-offs and decisions and maximize shareholder value, not only in the midterm like we're doing, but also into the longer term. On CapEx, one of the beauties of the scale that we've been able to accomplish with new T-Mobile is Neville and team have been able to successfully go out and create procurement arrangements with some of the largest OEMs. And we are building faster in terms of a network build than anybody has in this country before. And that pace is what we're doing to build 11.7 to 12 billion in CapEx annually. So you can think about as this massive network build completes, then it's rational that you would have a lower step down in CapEx. And the beauty is that those procurement synergies that we've been able to deliver on with the scale are what drive not only today the ability to build this network at such a rapid pace with the CapEx that we're actually doing, which is significantly less than our competition, but also then allows that step down.
Great, thanks.
All right, let's wrap up our final question with our host today. Thank you again for having us. Tim, go ahead with your question.
Yeah. Hey, folks, how are you doing? I hope you're
great.
You see us all?
Yes,
hey guys.
We're sorry we missed you. I wish we were in Bonn. Great to see you.
Hey, look, first what I want to say is, guys, we got everything recorded what you said. You sounded very bullish. Peter, I got your payback starting 2022, so here we go, Everything is recorded, so that's, guys, we want to say thank you for outstanding performance and the great partnership with you guys over the last years. Thank you for your great friendship and what you delivered, including the pandemia management that was outstanding in the 10 million campaigns. There's one thing what I want to say. Guys, you have to work on your outfit, Now the Germans looking cooler than you guys, we are differentiating. Mike, you have to work on your differentiation, you know that.
Gosh, Tim, that's fantastic. I guess cool is in the eye of the beholder.
But we are definitely cooler than you guys. With this, keep on running, guys. It's great working with you, and it's fantastic, the results, and good luck with the upcoming months. We'll see you soon.
Well, it's great to see you guys today. Thanks for having us, and great day. Great first day to Capital Markets. We'll hope to see you again soon.
Bye-bye. See you guys.
Thank you.
Mike?
Okay. So thank you, everyone, for bearing with us. And I think, I hope you had a good first half of our Capital Markets Day, 2021 Capital Markets Day. So in terms of organization, tomorrow we start again. We start at 11 in the morning. The presentations for tomorrow, that's CET. The presentations will be available from 7 a.m. CET, so 6 GMT. And Claudia tomorrow Claudia Niemert will take us into the engine room, or I would call it maybe the cloud rather. And in any case, it's stuff for the dreams. And here we go. So look forward to welcome.